Hello everyone, welcome to another episode with me Shashank Godupa, and in today's episode we will be evaluating a very beautiful hospital company. Now I know a lot of people are not happy with the markets constantly falling, constantly in a downturn, but my job is to keep learning and my job is to keep educating you as much as possible. Now please note I am a SEBI registered research analyst, and as per the SEBI guidelines I do not hold any stock of this company of in the last 30 days or in the next 5 days of posting this video, right? So I will be talking about this company, and please note this is not a buy or sell recommendation. So let me and you just learn today, understand what is happening in this space, because this company is actually having a big change in this company that will actually start the next set of growth coming in this company. So let's quickly get into it and understand what this company is. Now don't just look at the name of the company and disappear. Your job is to learn as much as you can. Now, the name of the company is basically called Apollo Hospitals. Now, I know most of you guys have heard of Apollo Hospitals, but listen to me very carefully. Apollo Hospitals, in this entire market fall, the market has gone on 8%. Apollo Hospitals is up 7.85%. In the last 5 years, it has given 147%, and it is the largest hospital chain in India. Now, I know a lot of you guys might say that, Shashank, you know what, it's always good to buy a lower end hospital and then it becomes like Apollo Hospital, but that does not work entirely true in a hospital situation, and I'll explain some reasons why as well. So this company today is sitting at a market cap of 1 lakh crore. I think it is just in the large cap category. It has just reached it, but it still has a long runway to go because of some key triggers, and I'll tell you what those key triggers are as well. Now, if you look at the revenue, it's gone from 10,000 to 21,000 in just 4 years. In 4 years, the top line has doubled. The PAT has gone almost 10x, but we don't look at PAT here. We usually look at EBITDA itself. So EBITDA also of this company has gone down, and it is a darling for the mutual funds as well. Now, if you look at this company, if you see the EBITDA margin, the company's EBITDA margin is sitting at 12.6% margin at 2,391 crores. They currently have 73 hospitals, 10,000 beds, and 6,000 pharmacies. Now, a fun fact for all of you guys, Apollo Hospitals, most of the revenue comes from hospitals, but not all the revenue comes from hospitals. In fact, a big chunk of the revenue comes from non-hospital business. And that is a beautiful thing because there is a special situation happening in the company. A demerger is happening. So we will talk about all of that, right? Now, coming to why this company has been compounding like crazy, because their RBOB, which is average revenue per occupied bed, has constantly gone up. That means if you go into a hospital, you become a patient, the revenue that they can get from you keeps going up over time. So the premium demand is also happening, and now they've got into other sectors like transplants, neuro, ortho, cardiac, oncology, where the billings are very expensive. That is one. They have a capacity expansion. Now, this is something that most hospitals in India are doing, where they are all doing a massive capex expansion. Almost 30,000 crores of capacity expansion is happening in the entire hospital ecosystem. Now, I don't know how many of you like hospitals, but if you are someone who wants to learn about hospitals, in fact, this weekend on Saturday, April 18, this weekend, we have around 136 people already attending it. We are doing a full deep dive into the hospital sector. We will be covering most of the hospitals. We will be talking about the massive capex they are doing. We will talk about a small cap company, a PE-backed company doing a turnaround, most capital efficient hospital chain, and a high margin value chain company as well. So if you are interested in learning more about this via the webinar, please do join the webinar and I will see you guys there. Now, coming back to the video. And the third business, which is the digital and pharmacy scale. Now, you might have seen that Apollo has Apollo Digital, where you can talk to doctors online. They have Apollo pharmacies literally everywhere in all our airports, all locations. How much do you think that is actually doing? So we will talk about all of that, right? So if you actually see the fun part here, Apollo Hospitals, the hospitals makes only 52% of their entire revenue mix as of FY24, and remaining was pharmacy and diagnostics and retail. Now, if I go into their investor presentation, we will get a more clear understanding. Let me do year to date December 2025. You will see that this is the healthcare services of Apollo Health Co. Then we have AHLL. AHLL is nothing but their diagnostics and retail health. So, and the Apollo Health Co. is basically the digital health and pharmacy. So if you look at this, the healthcare services is around 31,000 and good EBITDA. That was the quarter. Let me do this. So if you look at the healthcare services, it is 9,287 crores, right? And then we have the health co department, which is around 7,959 crores. And then you have the AHLL, which is a small business, 1,375 crores, but all of them are growing. In fact, the hospital chain is growing at 12%. The healthco business is growing at 19% and the AHLL is also growing at 19%, which is crazy. But if you look at the PAT, obviously the PAT margins or the EBITDA margins of healthcare services will be more, because what happens is once you put a hospital and the capex is done, over a period of time, your operation costs are very low as compared to the hospital, right? Whereas in this business, the operation cost is quite high. So if you look at the margin here, 24.6% EBITDA margin is what they're operating as of December 2025. Year to date 25, okay. And if you look at the healthcare business, it's operating at 4.2 and AHLL is operating at 10% EBITDA margin. But AHLL is still a loss-making company, but this little more scale will become a profitable company. And same thing over here, it is at 4.2 and it is still making 2.7% PAT margins on this healthcare business, which is growing very, very, very fast, right? But a demerger is going to happen, and that is what I'm going to explain to you what this demerger is going to happen. Now, if you look at Apollo, it is one of the largest hospital chains in India, literally the largest, right? They are there almost everywhere. They have 76 hospitals, 10,000 beds as of today, and 9,500 operational beds. Out of that, owned hospitals are 47, managed hospitals are 6, daycare and surgery, day surgery and cradle, which is around 23. So that is how their beds are currently divided in this perspective, right? Now, why is the Indian healthcare sector doing so well? I don't know if you guys have noticed, but people are falling ill very often. I'm seeing a lot of people around me are also getting cancer very easily, right? Very early and very easily cancer is being happening. And what is happening is rising spend of insurance is also taking place. And we are seeing the fight to get quality stuff. Now, people, because the per capita income of India goes up, the rich people would want to go for the best of the best services. And if you look at how it is growing in the entire market, when we look at all the other companies, we see that Apollo Hospitals is growing at a very alarming rate, and it is doing quite well from that perspective, right? Now, if you look at the Apollo Health and Lifestyle, so they have this, right? They have Apollo Cradle, Apollo Fertility, Spectra Hospitals, Apollo Clinic, Apollo Sugar, Apollo Dental, Apollo Diagnostics, Apollo Dialysis. So literally they have all of this. As I said, this is also making money, 10% EBITDA margin, growing at 20%. It is actually growing very fast because here they're going super specialty, and in the main Apollo hospitals, they are multi-speciality. Here they focus on a single specialty. And as per an Aventis report, they said that in the next few years, single specialty will do better than super specialty, because if I have a, let's say, a problem, let's say any kind of problem, I would want to go specifically to Apollo Sugar Clinic. If I have a fertility issue, I will go to Apollo Fertility rather than going to Apollo's main hospital. So that is how they are diversifying their entire game. Now talking about the healthco business, which is currently sitting at 8.9%, again growing at 20% margin. So this is, remember I told you can book doctor online, get a consultation online. This is that business, and they are one of the biggest players in this space. They have everything involved. They have their own app, they have their own platform, they have their own pharmacy, they have their own doctors. So their margins are obviously going to be better than any platform that comes in the future. And this is something that is growing more and more, right? So this is something that we need to keep a track of, that it is literally growing extremely fast. So they have the hospital business, which we have seen. They have the digital business we have seen. And then we will look at the pharmacy business as well. Now, even the pharmacy business is not bad at all. I will come down. I will go directly to the snapshot of the pharmacy business and how it actually works, right? This is the inpatient revenue. Where is most of the revenue coming from? As you can see here, most of the revenue is coming from cardiologic problems, your heart, right? And then we have ortho. We have onco, which is your cancer specialty. We have neuro, which is head. And then we have ortho, which is 10, right? And out of the patient payer mix, only 45% of the people actually use insurance. Rest of the people don't use insurance in India. 40% of them pay by themselves. Imagine, cardio, onco, neuro, and 40% are paying most of their, scary. Now comes the expansion plan, and this is what I told you. The entire hospital sector today is doing a massive expansion plan as of now. Now, if you look at Apollo Hospitals, let's understand what they're doing from their healthcare services. So they are now getting 4,400 capacity beds, 3,600 census beds over the next 5 years. Over the next 5 years, they want to get 4,400 beds. Today, they have around 10,000 beds. That means in the next 5 years, 50% more capacity will be added over the next 5 years. 50%, right? The total Project cost is going to be 8,200 crores with the balance to be spent of 5,400 crores. And then post expansion, they're saying we will have census beds of 13,100, which is crazy. And where are these beds coming from? You can see that it is coming from Pune, Hyderabad, Gachibowli, NCR, Jubilee Hills, again Hyderabad, Secunderabad. So a lot of expansion in Andhra Pradesh and Telangana region. And if you look at expected commissioning in FY30, the future expansion, Mumbai, Sarjapur, which is Bangalore, Chennai, UP, Hyderabad again. Very interesting. So 4,400 beds is coming from this perspective. And we can see that most of it is coming in Gurgaon now, 480. Gurgaon mein 480 is coming. And Pune 384 and Gachibowli, Hyderabad is also coming. Very interesting. Very interesting. And they're acquiring hospitals, left, right, center, they're acquiring. This is how it looks, right? Coming to where are they making money from? So if you look at Pan India December year to date, this number, you will see that their current bed occupancy is 67%, which is quite high. 67% is quite high. Inpatient volume is 4 lakh 72, outpatient is 17 lakh. Average inpatient ALOS. What is ALOS? Average length of stay. So that means when a person comes and gets admitted inside, 3 days to average chala jayega, wo bande ka 3 days will happen. By the way, there is a trend in the industry that this ALOS is actually reducing. So that is one beautiful thing changing in the industry, that ALOS is actually going down because the operations have become so fast, so efficient that now the ALOS, basically I'll go in, I'll get operated. Sometimes same day I can get discharged, sometimes next day I can get discharged. But the cost, I will give you the same amount. The money, I will pay you the same amount. So that is something we're looking at. And this is the beauty of the game. Average revenue per patient. In 2024, their average revenue per patient who goes in was 1,60,000. Now it has gone up to 1,75,000. It has gone up by 10%. You know, people keep telling you that medical inflation is scary. Medical inflation is scary. This is scary. Okay. So this was the operational snapshot, and then they give you a snapshot of each and every region, right? So this we will not go deep into. I want to go to that main part, which is your, the beautiful part, which is the demerger that's happening, right? So let me go to the demerger part. I'm very interested in that demerger. So basically, this is where the game is changing. Okay, Apollo Health Co. Composite scheme as approved by the board on June 30th, 2025. This is happening now. So demerger of the pharmacy distribution business, Apollo 24/7 digital platform business is going to happen. Okay, and all of this is going to be demerged into a new company. Step 2, amalgamation of Apollo Health Co., which is again the other part, into this new company. Kaimed, which recently they had done acquisition, that is also going into this. Basically, hospitals will be a full different business. All the rest, which is remaining 50% of the revenue, will come into this. So as you can see here, you can see this here, resultant approved resultant group structure. This is Apollo Hospitals, Advent Group, ESOP, Kaimed Promoters, and everything will come into Apollo Hospitals Limited. And then you will have the subsidiary companies here. Now this was the earlier one. Let's see how it looks like this. It is little complicated. Estimated listing by Q4 FY27, which is going to happen very soon. So slightly complicated, yes. But this new company is going to definitely be very big because it is going to have all the 3 businesses into it as well. So we are going to be very interested to look at how this actually played out. This is how the combined stuff looks like. Offline distribution business in Q3 made 2,500 crores, 3,100 from online pharmacy. So the total health co business was 2,800. The Kaimed acquisition that came in is around 3,900. So the combined entity of this company that will be demerged will be 5,000 crores, and they will have an EBITDA of 5%, which means this 5% can go up and up, right? So it is actually very, very small, the way I look at the 5%. So we are going to see very, very interesting changes coming into this business, and that is what I am very excited to look at. Right now, coming to the future of this business, right? Why did I want to do this? Because of the demerger and special situation happening, both businesses are growing fast. So Apollo Hospitals is like a steady compounder. 4,400 beds are coming, almost 40 to 50% of capex is coming. So that is growing peacefully. The new business, which is going to be the digital business with the super specialty and all of that, that is also going to do really well, and that is also going to grow. So both businesses are going to be very interesting to track, and that is why I said Apollo Hospitals, even though it is a leader in this space, is looking very interesting for the future, right? But again, if you are ever taking any position, please consult your financial advisor. I am a research analyst. My job is to do research and understand the company, whether it is good or bad, right? But what are the key risks of this business? Because we need to understand both sides. Risk is any delay in capex becomes a massive risk. Let's say they don't reach the 4,400 bed target, that is a problem. The capacity utilization of their bed drops. The average revenue per patient reduces or stagnates. These are the three big risks. And fourth is that this demerger that's supposed to happen does not happen on time, and that gets delayed for 1 more year. These are some of the risks that are there. But they have two fast growing businesses, but the main business is getting affected by this fast growing business because you need more money to grow this, more capex to grow this, and they're not making good margins. Whereas this company is making 25% EBITDA margins. So now they're going to demerge the two, and you will see the game playing out in no time. Again, I hope you guys enjoyed this video, and I hope you guys watched it till the end. My alarm is ringing as well. But if you are interested, you can join the hospital sector webinar that is going to happen this weekend. And I will see you guys soon. Take care. See you. Bye-bye.